Fiscal 2013 growth at just 5% is not a shocker, but simply an endorsement of the chief statistician. Earlier estimates, in fact, Montek Singh Ahluwalia believes that there are plenty of positives that will boost growth for the current year. The Deputy Chairman of the Planning Commission also believes that any attempt to curtail fiscal deficit below 4.8% will only dent growth further. In an exclusive chat with ET Now Supresh Srinit, Ahluwalia asserts that rupee's relentless fall is not a big concern just yet.
What you've just seen from the CSO is effectively an endorsement of what they said about 2 months ago as an advance estimate, that growth in 2012-13 was only 5%.
Perhaps the economy has bottomed out and you will expect growth to pick up in fiscal 2014. For that growth to revive, one big trigger will be investments, and we will perhaps see some investments break ground in the next few months or so. What could the other triggers be? Well, what are you pinning your hopes on?
Well, on everything actually. I'm quite hopeful that we will have a better agricultural performance than we had last year. I think the news on the fiscal deficit is very good. Latest number for the last year is actually much better than what they feared. The other is softening of oil prices, etc., that will reduce and remove the oil deficit on oil account. The fact that we are adjusting prices, which is a sensible thing to do. Inflation has come down. Current account deficit will be better this year for sure. I mean, there's a lot of positives. All you need is that kick-starting on the investment front.
The concern last fiscal was that everybody in the government and outside ratings agencies were losing sleep over the fact that we will not be able to rein in the deficit. We've been able to do that for a very difficult year last fiscal. How challenging will it then be to get it lower than 4.8% targeted for this fiscal?
I would not actually.
I
would not encourage a lowering to below 4.8%. I mean, I think when you have a fiscal target, see, the logic of a fiscal target in the current year is that you don't want to crowd out the private sector.
That's right.
Right now the problem is the private sector is not investing as much as it should. So there's no chance whatsoever of crowding out the private sector.
Despite the fiscal deficit number coming down substantially, and that was the big concern that everybody spoke about till about 2 months back, the rupee continued to fall. What explains this relentless weakness in the Indian currency?
Benchmarking the rupee against the dollar is slightly misleading, because in the last few weeks the dollar has been strengthening against other currencies. So if you need to look at whether the rupee has weakened against the relevant currencies. I mean, we are running an exchange rate which reflects market conditions.
That's right.
And in my view, you've got a period of currency fluctuation and volatility, and you'd expect in every currency a little bit of up and down movement. So the extent of the change is not, in my view, a cause of worry at all.
Do you believe an RBI intervention is warranted?
You know, I think the RBI intervention is guided by a pretty well-established principle, and that is that we allow the rupee to find its level in the exchange market and intervene only to control a situation of excess volatility or speculative pressure.